Okay, so our first auction date was 3rd of November here, and we saw a minus 7.4% drop in the GDT. So now let's look at the NZD price on that day. This bar is 3rd of November, but we'll be trading on somewhere near the end of this day, 3rd of November, and throughout the whole day of this 4th of November. So there was a 7% drop there, and here we can see a very nice large drop in the NZD price. So that's matching. Now this has been going on for some time. I have seen that till one day here, the one I observed, I think, uh, which one here, sometime in April, maybe yeah, 4th of August, this one. So 4th of August, what happened here is minus 9.3% drop in GDT. 4th of August, no, is it August? Yeah, 4th of August. Now let's see what has happened here in August. Yeah, 4th of August. Yeah, this is also fine. 5th of August was a down day. Now the price doesn't move very long distance on the following day, not necessarily. Sometimes the direction is correct, but the movement is not far. And another interesting thing is, on the 5th of August only, the market went down, but from next day onwards, it immediately bounced back and went to completely other direction. So we should be restricting to trading only on the following day and not depend too much on the further day. So if the profit target is reached on that particular day, fine. Otherwise, it's better to close the trade at the end of the day. So now let's see another day. 15th July, say 16th June. Yeah, 16th June. There was a very minor drop of only 1.3% here in the GDT. 16th June. So here it is, June 16th. Yeah, this bar. Yeah, this is the one I was talking about. So this is 16th June, and on the next day, actually, what happened, that market went down first up to this level, and then finally again pulled back and closed almost at the same level. So basically, if you hold the trade till at the end of the day, you don't lose much, but you don't gain either. So the profit target should have been reached here, but the worry is, look at the high price of that day. This is interesting. So what happens here, on this date, when we get the result that the GDT has gone down, we place a trade, and ideally we should be putting stop loss somewhere around this level, which is the high of this bar. So high of this bar was 0.7009. Here you can see, sorry, yeah. So the high was 0.7009, but what happened, that market first move upwards, took your stop loss, and then it came down. So that is the problem. Sometimes this is the thing market makers always do. They will bring the market down, but before that they will lift it little bit higher in the opposite direction, will take out your stop loss, and then they will move the market towards down. But that is a part of the game. You just can't avoid it. You always have to um, restrict your, means control your risk. So this is one risk, always it will be there. But I observed a few other days where market is completely moving in another direction. That is what we have to look at what happened actually on those dates. So let me find out. I just observed one of those days. So where did we looked here, and then say 2nd June. Somewhere here I observed 2 consecutive days where the market was completely in different directions. Probably which one? Okay, 2nd June. 2nd June we have minus 4.3% drop in GDT. 2nd June. This is my 2nd June bar. Fantastic. And on the 3rd day also we got a drop in NZD. So okay, perfect so far. Next, 19th of May we have minus 2.2% drop. 19th of May, which is this bar. And again on 20th we got a nice, but we always have to see that there is a spike there on the upward, so have to go down to a narrower scale, narrower time frame, and see that what happens at that point. Because if this moves up initially in the morning up to this level, it may take out our stop loss. So whether it goes down or not throughout the day doesn't matter. If we get stopped out here, means that is a loss. So that is the risk always here. Otherwise you have to place your risk at this level, which is quite high. And if you put your risk from this to this level at take that much of risk, you are not getting rewarded at the end of the day, because the market has just only moved this much. So your reward will become much less than the risk you have taken initially. So it's all about where did you place your initial stop loss. So that has to be fine-tuned by looking at a narrower time frame, something like 5-minute chart or half an hour chart or 1 hour chart. So this spike upwards is the riskiest part. So market opens here, goes up to this level, and then comes down. So finally we are correct on the direction, but trade will still be a loss if you have placed the stop loss somewhere at this zone. So market will take your stop loss and then move. Okay, so this was which date? 19th of May. 5th of May we have a minus 3.5% drop. 5th of May. 5th of May is 5th of May, 4th of May, 5th of May. Yeah, 5th of May is this bar. So on the next day it is okay. 6th of May was again a down bar. So fantastic. Nicely correlated so far. 15th of April we have a minus 3.6% drawdown. Fall in GDT. 15th of April. Let's look at 15th of April. Yeah, this is the interesting part. So this bar is 15th of April. It was nicely going up, and then on the next day also, on 16th of April, the NZD moved this much upwards, whereas the GDT was down by a few percentage on that day, around 4%. So this is something cannot be explained. Why NZD moved down? It may be some USD effect. That day something might have happened anyway, because it was continuously moving up. From this level it went up, and then it went up, and on the following day also it went up. So this must have been US dollar effect. So that completely ignores the GDT price, and there may be some other really big fundamental issue on those days. We have to see. Maybe around that time there was some Greece issue or something big was happening. So that is a complete loss. So before that we have 1st April. 1st April is a massive down in the GDT, minus 11%. So naturally we will be quite sure that the NZD will fall on that day. Minus 11% fall on 1st April. Okay, 1st April, which is the date, 4th. Yeah, this is 1st April. So this 1st April, it was a slightly lower bar, but the market moved down sharply here up to this point and then went up. But we don't know at what point this happened. Had it happened before GDT or after GDT, we don't know. But interestingly, on the next day, after the 11% fall in GDT, we are still seeing a very sharp reversal in the price movement of the NZD. The NZD started from here and moved up. So it is a complete reverse direction. So these kind of things are happening. So there will be some disappointments and some other factors involved here. We still don't know. But overall, it looks like, well, it's never going to be 100% or 90%. But even if it is, say, 70-75% times of correct, if you are correct on direction, then probably in the long run it will still be a winning strategy. So that's the thing I wanted to show you.